Hello and welcome to Investors Hangout. This weekly interaction to help you learn and understand savings and investment issues is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now, with this year coming to a close and a new year about to begin, I think it's a good time to reflect on the lessons learned from 2023. Financially, 2023 was a roller coaster ride of sorts. It was a year where we saw the banks collapsing in the US, the FTX bust, there was IPO mania, then the markets registered record highs and lows. So let's look at, it's a good time to delve deeper into the lessons learned, the financial lessons learned from 2023. Dhirendra, welcome.
Thank you.
First of all, let's start with the banking crisis that happened in March 2023. Do you think the banks collapsing in the US, the reasons were varied, but what are the lessons that we here in India learned from that?
No, the reasons were not varied. Mm-hmm. The reason why a bank collapses is only because people lose confidence in a bank. And whatever be the situation, mm-hmm. That is the final outcome. And why people lose confidence in a bank? Because there is a likelihood, or there's a rumor, or there's an expectation that the bank's assets are of lower value than the bank's liabilities, right. Which means that somebody will actually lose his money if everybody turns up to take his money. In which case, any bank will collapse. But this perception or the understanding or the arithmetic or the reporting of the number, assets and liabilities is the primary driver. And I think we don't have to learn any lesson from this. Mm-hmm. Because last decade, in fact, America should have learned these lessons from us. Because we struggled with our own banking problem. We had more than a decade-long, period of non-performing assets. All our banks were close to bankruptcy. Mm-hmm. All the leading banks were government-owned. So government could not, and it has been a big struggle. It has been a big setback for our economic growth. Mm. It has been a big setback for our, I would say, business growth. Banks at the heart of our economic system. Banks are very significant part of the market. Hmm. If you look at Sensex and Nifty, it is nearly 25-26%. So look at it, it is 1/4 of the market. But market is one side of it. The other is that they actually greased the whole economic system. There was no credit extension. They were struggling. They have seen collapsing. Then that has led to all kind of reforms. America doesn't need reform. They already have the bankruptcy, insolvency mechanism and all those things happen anyway. Hmm. So we are learned on this front. We and we have learned the hard way. Hmm. We have spent nearly 10-12 years doing this, and we are actually bearing the fruits of all the fixing that has been done in the last 10-12 years.
Great. Then inflation. In July 2023, India recorded inflation of 7.44%. That was on the higher side. So, with the rising costs and our money's capacity to buy less than what we're used to, what can we do? What can investors do there?
7.4% inflation is high. But I would not say that, we have come across a situation where something is alarming. It's not hyperinflation. And if it is seasonal, cyclical, uptake of inflation, it will come down. But the second thing is that, how uncomfortable Indians are with 7.5% inflation. We are used to 6-7% inflation. I think the real problem is with the US. Mm-hmm. That is a significant economy. That's a very large economy. That actually supports many of the businesses because we are ancillary to their economic activity. Mm-hmm. And there, people are not used to inflation. Mm-hmm. Wages did not go up for 10-12 years and it was fine. Mm-hmm. They were able to support the mortgage payment. So once this changes, this can have a very significant impact, and that is something we should be wary of. Mm-hmm. Their inflation is something which they are not used to. They are not used to for 30 years. Mm-hmm. And that will lead to increase of their borrowing cost. Everybody is heavily indebted as well there. And that will have a lasting implication, but it's very difficult to guess what else will happen. We should be watchful of that. Our inflation, you have only two things. Any inflationary situation, you have to deal with in two manners. Mm-hmm. Reduce your expenses or increase your income, because you can't really create anything. So do either of the two, okay. Or ideally both.
All right, then Debt funds, they lost indexation benefit early on in 2023, and that led to anxiety and chaos among investors. Do debt funds, investing in debt funds, does it still make sense?
Yeah, it has been disappointing for debt fund because indexation benefit was very significant, and also because debt fund are the staple of investors' portfolio.
Right.
Whatever we may say that invest in equity for the long term, but if on a plate your staple food is debt fund, that is where most people park. And in that sense, it is disappointing that debt funds became taxable, and it was not a huge privilege given by the government, but whatever it was, it brings parity with the deposits now. But nevertheless, debt funds still have a case that they get you diversification, they get you superior liquidity, and it has become taxable. But for a large number, for the kind of constituency we address, I think those people should still embrace debt funds, simply because small investors, there is no TDS on debt fund. And if your total income and here the gains from those debt fund is less than your taxable bracket, then it doesn't matter to you.
Okay, and they still earn you better returns than FDs.
Little better the return. I don't think return is the primary driver. It's the high liquidity and little better.
Okay.
Ability to take your money out anytime at a day's notice from your bed. The kind of apps. You don't have to visit the bank. The convenience that has come to mutual fund is quite impressive.
All right, then next comes the FTX debacle. While that happened in November 2022, Sam Bankman-Fried, he was arrested in, I think, early November 2023. But cryptocurrency has been an asset that youngsters are lured into.
Yeah, 2023, in fact, it is quite amazing that here is something which is baseless.
Yeah.
Truly baseless. There is no basis to cryptocurrency or Bitcoin going up in value. More so today when many of the recently minted crypto coins or cryptocurrencies, they simply vaporized. And then it has become a center point of fraudulent activities. People are going to jail. People are going to jail for money laundering. Most of the promoters are in trouble. Some of the cryptocurrencies, it simply vanished. Somebody just switched off the system and that Luna thing disappeared overnight. So despite this, if large, it has been the biggest gainer. One asset which has gained the most is Bitcoin in 2023.
Yeah.
Beating equity, beating debt, beating any market segment, any sector, anything. Besides that, because it's baseless, the price going up itself is a draw.
Yeah.
So one has to really be wary of this, that just make sure that have a good time, punt with crypto, but make sure that you are punting in a manner that you are not the last man holding the baby, because somebody will have to.
All right, then IPOs. That's one hot topic. A lot of investors invested in IPOs. There were massive inflows in 2023 in IPOs. What do you have to say about them?
I would say that all small investors should look at IPO, enhance their general knowledge, and carry on with their SIP. The reason is very simple. You need to have 50,000, 1 lakh rupee, 2 lakh rupee, 5 lakh rupee handy, available in your bank to make investment or to bid for these IPOs.
Right.
And then there is an element of lottery. You will bid for 500 shares and you might get 48 shares or something like that. On a proportionate basis, it will be allotted to you. And all your money will be stuck till the allotment process is on. And then once it is freed, then you can move to the other IPO. Don't do that with your small money. And use the IPO process to learn about new companies. Because anyway, you won't be able to buy 5 lakh rupee worth of shares in a good IPO where a lot of people are bidding for it. But you can always buy it after it is listed. IPO is an undesirable thing for small investor because you should be diversified. You should be methodical. You should be disciplined. And then you should not be keeping your money idle, which is a significant part of your savings all the time while you are waiting for and bidding it in IPOs and waiting for the allotment. Do your SIP and once in a while and learn about these companies. If you like it, then go for that company. Use it as an opportunity to understand it better.
Okay. Now then comes the wars, even before the Russia-Ukraine war came to an end, the Israel-Palestine conflict, that started. So what do you say should investors learn about investing in times of war?
I would say that it is in everybody's interest to make sure that there is a normalcy of a kind so that substantial normalcy prevails with your trade movement and all the goods and services. And
which is what happens also.
Which is what happens. But many a times, it could be, so use it as an opportunity. If you have some opportune money, use all those money, all those occasions where, because markets do panic, markets are used to, and then most of the time it will be exaggerated. And it is bad for those economies specifically which are hurt. I would not worry about wars, and because it is a disruptive thing. But is it really a derailment for everything? The way we have been able to, make a comeback after World War II, where the whole world looked like coming to an end. So in that sense, I would say that use it as an opportunity, have a long-term view, be in equity, and make sure that you have reasonable money in fixed income, so that if it is happening in the neighborhood, you still have enough for the immediate purpose.
All right, now lastly, the volatile markets. 2023 witnessed them in full glory. So what is the takeaway for investors there?
No, so was 2022, so was 2021. So don't take into, because markets, every day they open and they cause anxiety. In fact, 2023 was great in a sense that volatility is actually expressed in a very unusual way. People say that it is volatile only when it goes down. Volatile, the dictionary meaning is something which goes up and goes down as well. Something which, which keeps, moving up and down. Broadly speaking, market has gone up quite substantially. It has gone less and it has gone up substantially despite all the odds, despite all the bad news. And simply because it is quite a pointer that if companies do well, or if companies are expected to do well, or if most investors think that they will do well in future, markets are able to withstand. Besides that, the amount of individual investors pouring money into the market through mutual fund is a very big reflection of the confidence in the market, and which is a very significant thing.
Great. So the major takeaway of this episode is that all is well. You carry on with your plan, and
that is how it is mostly.
Okay. Now, before we end today's episode, we have a viewer's question that we would like to answer. So, Ms. Soni wants to know, how is tax calculated on mutual funds? The entry load, exit load, long-term capital gains tax, short-term capital gains, all of that.
Yeah. One is that, there is no entry load anymore. There is an exit load, but it is actually not an exit load per se. Because most of the load in India is, I would say, something called contingent load. It's a sales charge. Because most of the exit load are designed in a manner that if you stay with the fund for more than 1 year, you are not liable to pay any taxes, any load. If you take your money out before 1 year, then I will charge you 1%. Your capital goes down by 1%. So that is primarily a very desirable kind of load, because it encourages desirable behavior.
To invest for long term.
Invest for long term. And that portfolio will also get bruised by somebody's erratic behavior, assuming that there's a 100 crore fund in which somebody has invested 10 crore. And if he actually takes out 10 crore in a hurry, he came few weeks back, because it has gone up, he's taking out, then the fund manager, it will cause disruption. He'll have to sell it in a hurry. And in that case, other investors should benefit from that, because the money charged on exit load goes back into the fund. So it compensates the other investors, the remaining investors of that. Then comes, how much you have to pay to the government. One is that there is no TDS on mutual fund. But one significant advantage is that mutual funds buy and sell shares or bonds or anything. You are not supposed to pay any tax till you realize it. If you invest in a fund and don't do anything for next 20 years, you are not supposed to pay any tax.
Only when you
realize it. And when you realize it, then there are all kind of tax that are levied, depending on whether it is equity or debt. If it is equity, then your long-term capital gains give 10% of that. If it is short-term capital gains, which means investment of less than 1 year, then you have to pay 15% capital gains tax. In case of debt, all your income, which means you invested 1 lakh of rupees and it has become 2 lakh rupees, and in 20 years, still your 1 lakh rupee is income and pay tax on that. So things are little less attractive as they used to be, but this is how it is. I think, one of the significant advantage of mutual fund is the tax deferral. Till you realize it, you don't have to pay anything. And there are people who have investment, they can take it out whenever they want to, but there is a possibility that money might remain invested and it will get passed on through generations. So you don't really pay any taxes till you touch it.
All right, so we have dealt with all these events in great detail whenever they were happening, but today's episode, you can, watch it for the lessons learned from each one of them. Well, that's all we have for you in today's episode. Keep watching this space for more information. If you like the show, do subscribe to our YouTube channel. Take care. Bye for now.